Welcome to another Market Matters video update for it's Wednesday, the 11th of August. Today, reporting in full swing. We're going to get a few takes on a few companies that are reported today from James here. This morning, CBA, obviously the biggest one out today. It was a cracking result. Stock rallied to all-time highs up at 109 and change there. It's off a little bit from that, but it's still up today. Biggest bank in Australia. What's your take on that one, James?
Yeah, good morning to you, Harry, and listeners. A really strong result from CBA. Obviously, the price leading into the FY21 full-year result for CBA had been strong, so there was a lot built into this, baked into the cake. So it was always going to be hard to beat that, but they did. So, cash earnings were better than expected. The dividend was better than expected. They launched a $6 billion off-market buyback. So the market had factored in a $5 billion off-market buyback, but that was sort of pre-lockdown in Sydney and Melbourne. So, I had been hearing whispers around, analysts concerned around that $5 billion buyback happening, whether or not it would be downplayed to a $2 billion on-market buyback, etc. So I don't know. I read through the result first up this morning and went, gee, it's such a high quality business. They just run it so well. They've got a huge amount of capital on their balance sheet, even after doing, paying this second half dividend, even after doing this, $6 billion buyback, I should say. It's going to reduce the share count on issue by about 3.5%. So that's obviously EPS positive. They're a little bit downbeat around the, cautious around the outlook, I should say, which that's to be expected. We're all sitting here working from home. There's lockdowns in the two major cities around the country. So, there's reasons to be a little bit cautious, but I just, every time I read CBA's results, it's just they're just strong in pretty much every aspect of the book. So we like it. It just comes down to price. So I wrote this morning that if it traded up to 110, we might trim it and allocate some funds back into cheaper parts of the market, Harry.
Yeah, one of those things that we flagged we might switch into is IAG, who also reported today. They were up this morning. They've actually pulled back and are now lower as the conference call goes on. We've got it in the income portfolio. Will we be picking that up in the growth portfolio, James?
Yeah, so we'll see. So I'm not on the conference call. Obviously, we'll get a rundown of that post the call. These results were pre-announced at the back end of July, so there wasn't any new news coming out of IAG today. Obviously, how to frame IAG's result. Firstly, they've had a pretty difficult 12 months. They came out in July and sort of guided the market to a bit more stability, and they had more of a handle on their business, it seemed, going into FY22. So they've put guidance out there. They've put more key targets out there for the next 12 months. Obviously, IAG rallied on the back of a strong result from Suncorp earlier in the week, which makes sense, right? So the insurance business is performing quite well. Obviously, they took some large provisioning relating to COVID. IAG took $1.2 billion worth of COVID provisioning. So far, it's cost them about $50 million in the first half and nothing material in the second half. So like the banks, they over-provisioned for COVID expenses or COVID issues, and that hasn't come to pass. So, I like it. It's depressed, but the outlook is improving. The business is turning around. So, IAG, we're considering trimming CBA and putting some funds into IAG for the flagship growth portfolio.
One stock that's been strong of late and it's actually weaker today on their result is Mineral Resources. It's been a phenomenal performer over the last few months. They've got a hand in a few different pies, old MIN. What do you make of that result, and where do you see that stock going from here?
Yeah, lithium and iron ore, two phenomenal commodities over the last 12 months, particularly lithium in the last little while. So obviously there's been some changes to government regulation around the world to incentivize electric vehicles, etc. That's obviously put the spurts under the lithium price. Iron ore, as we know, has been really strong, but it has pulled back in the last couple of weeks to a month or so. So I think the outlook for lithium is strong, but I think where the market is pricing it now is pretty aggressive. So I wouldn't be a buyer at these levels. And the outlook for iron ore, I think, in second half of in the second half of this calendar year, demand sort of tapers off a little bit out of China, and also you've got increasing supply. So there's more supply of iron ore coming on stream, particularly as the South American supply ratchets up. They've had some issues over the last 12 months, but that's going to ratchet up. So look, I'm less optimistic on mineral resources for the next 12 months as they've just been. That said, today's result was a good one. It was a touch below expectations, but it's hard to fault this company. You know, they've delivered profit growth of nearly 80% over the last 12 months. If you believe the numbers that the market is factoring in for FY22, they're going to be on something like 9.5, a PE of 9.5 times and a yield of 5% going forward. So, you know, it's hard to argue with it, but I wouldn't be a buyer here. I'd be a buyer of weakness in that stock. Yeah,
definitely. I'm going to put you on the spot a bit here now, James. Any other stocks that we haven't spoken about today that's caught your eye in reporting so far?
So Challenger Group Financial caught my eye. I mean, this is a notoriously complex business, and they've actually had a pretty poor time over the last couple of years. So, but the strength in the annuity sales caught my eye. I think they've got some issues around improving the returns on their book. They obviously, you know, COVID hit, they went really bearish at the wrong time in terms of the risk weightings in their book that underpin their annuities. But if I look forward, I think it's a stock that's going to grow sort of plus 10% over the next 12 months. It's on 14 times. The only other issue is that it's got a CEO who's departed again. So 2.5 years into a 5-year tenure. And there's been about 3 CEOs that have departed pretty quickly in terms of Challenger. So sort of 50-50, but it's a stock I think that's worth some consideration going forward. So that'll be one so far. Not a lot of the smaller companies have reported yet, so it'll be more interesting to see some of the interesting sort of smaller companies. One I will note, the Trade Desk TTD, now a national portfolio, reported a quarterly update, not last night, the night before, and that was a really strong quarterly update, and we've seen a string of broker upgrades on the back of that. So that rallied 7% last night.
Oh, awesome, James. We've just seen the market crash through 7,600 again for the second time today, first time of all time now. What's your take on stocks here? Where would you be parking your cash?
I mean, the market's strong, and we've written numerous times in the last couple of months that you got to be buyers of weakness. Here the market is bullish. We're in a bull market. That's what happens. You know, stocks continue to grind higher. Earnings are underpinning that. We've seen in this reporting season so far, I know it's only early days, but earnings have been strong and outlook statements have been fine. So I'm optimistic in the market here. Low rates, earnings are ratcheting higher, but it is all about being in the right stocks and the right sectors at this point in time. So I like the composition of our portfolios right now, Harry. There's a couple of, just as one of the kids starts printing something off on the printer next to me, there's strong momentum in a number of the positions we're holding. So the investment platforms has sort of caught my eye this week. Hub that we have in the flagship growth premium in the emerging companies, they've both been really strong. I like the look of those. Some of the sort of value parts of the technology space, Bravura Solutions caught my eye this week. Telstra reports tomorrow. That's going to be really interesting. That is trading up towards our $4 price target in Telstra, but that'll be interesting tomorrow. So again, I think it's all about optimizing portfolios. We work tirelessly to try and get the best mix of stocks in our portfolios, Harry, and that's what we'll continue to do, mate. And reporting gives us a really good indication of how companies are tracking at this point in time. So I like our portfolios now, but we'll tweak them if necessary.
Yeah, definitely. It's an exciting time to be in the market for a lot of reasons, James, but that'll do us for
You look excited, mate. You look excited.
I'm excited.
You're having a bad hair day today.
Barber needs a call.
See ya.